quite interesting comparing that to what has been happening for the first half year of 2022 in the African market. Of course, we've seen the decline in majority of them, of course, with valid reasons. But there's always an anomaly, and that is Nigeria. And there are quite a number of explanations that give to that. You know, there is more reinvesting within the market itself. What are they doing different, and what is the implication of what they're doing different? Is it something that can be applied here and work for us, or the current structure that we have, it's even better since you can easily come in and move out?
I think from a incentive structure perspective, the Kenyan market provides one of the best markets for investors to participate, especially foreign investors. The incentive structure we have in Kenya is very attractive. Number one, when it comes to the macro level, we have a very well diversified economy, a very good capacity, a very good infrastructure capability than most markets in Africa. Secondly, in the capital markets, our incentive structure for foreign investments is very good. For instance, if you're a foreign investor, we don't have a restriction on what percent of a company you can own. You can actually own up to 100% of a company, and except those that are considered strategic. And for that, you need an approval from the Capital Markets Authority to increase your exposure in that particular counter. Secondly, we don't have capital gains tax in our market. Most markets in Africa have that. We don't have currency controls. So today, if I sell, I can actually be able to repatriate my money. There are no currency controls. So we have a very good incentive structure for the capital markets, and even from an economic perspective. Now, the Nigerian case is really, without going too much into it, but our reading of it is, one, the Nigerian incentive structure is not comparable to ours. They have currency restrictions, for instance. They have a level of capital gains tax in their market. So I think what could be helping them at the moment is that a lot of the monies that could actually find its way out is being reinvested because of certain controls. And that's possibly one of the key reasons that's helping there. Albeit the fact that possibly that the economy is a bit more stable now, and ideally they don't have any key events like elections going through, so it's more of a stable environment for the time being, and that could be helping them trend up. Okay. And I think for us, so our reading of it is that it's probably a one-time opportunity. A lot of us have taken sort of the normal trend that has happened based on the global macros and also some of the local challenges that we continue to face.
Okay. Just recently, the unveil of the Nairobi International Finance Center, which is a critical milestone when it comes to achieving, Vision 2030. At the same time, one of the promises and the incentive, proposition that NIFC is giving is promising to deepen our markets. How is it going to do so?
First of all, I should say that we are very happy with that particular launch. The Nairobi International Financial Center is one of the key infrastructure platforms that will provide avenue for investors to access Kenya using that window. Now, a lot of international investors would like to make Kenya their headquarters. And so the absence of a very ideal structure then makes other jurisdictions like Mauritius and other markets, even in Dubai, more attractive because the incentive structures in those jurisdictions are very important. So what does the NIFC provide? NIFC provides an ability for a company to come and set up their offices here, access incentives that'll help them stabilize faster, work permits, and many other opportunities in line with international standards. So that's how the structure has been set up. For us as the NSE, what does that do? When we have these big companies coming to put their locations or make these their locations, then they have the ability to look at the markets locally as well, from being resident in the local market. So these companies will then think, okay, I'm growing very well in Africa and I'm headquartered in Kenya. Why don't I think I should maybe list part of my shares, my Africa headquarters, my Africa holdings, into a market like Kenya, because this is where I am. Even in terms of the interactions that we will have with them, it'll be a lot easier. And that's why for us, partnering with the NIFC is a very, very good opportunity for us to build this market at a global scale. Secondly, we're able to then also have unique opportunities. For instance, carbon trading. Carbon trading, anybody wishing to set up a carbon trading company through the NIFC has got a tax incentive provided to them. Now, NSE has got a very big strategy around climate action. And to do that, we have developed an asset class or asset classes for investors to access capital markets finances to target climate-related opportunities. The first one we did was the Econ Green Bond in 2018. We are talking to a number of other potential issuers to issue green bonds. The government is also discussing ability to issue a green bond and possibly list it here. So that climate action strategy is really driven towards providing avenues for institutions to exploit those opportunities using local currency financing. So the air carbon NSC, NIFC engagement is very, very important for us because that memorandum provides us the opportunity to build an understanding around these markets. What kind of regulations do they have to operate within? What kind of platforms are these being traded on? Who are the buyers of these products? How are they registered? So there's a very big opportunity to learn and engage. Okay. Potentially, it could consummate into us establishing a company in Kenya. We as the NSE are going to be leading the intervention towards establishing a carbon exchange in Kenya. So we think we'll be engaging with many partners around this.
Wow.
So the opportunity is immense. We're happy with that development, and we look forward to how we can develop a carbon exchange.
Definitely. And as we finish up, of course, just less than a month to the election, and with all these trends, of course, now is a dip. Everyone is being told buy. Now you can afford it. Buy as much as you can because we are bouncing back. So are we expecting this bounce back to be experiencing this Q3 moving into the last quarter of the year? And what is the sentiment of the exchange around the general election as we clear up?
Thank you. So we've been in this cycle for a number of times, and we really have seen the trends that happen. Pre-election markets sort of trend downwards. Post-elections, there's some level of recovery. And so our assessment about the outcome or the performance of the market is that the trends won't change much. So we believe there'll be some good level of recovery after the elections and after settlements of any other issues post-elections happen. And so that's why we keep saying there's a case to buy. Secondly, elections notwithstanding, the market is so undervalued from a fundamental perspective. Companies in Kenya are now trading below 10x or multiples of 10. What do I mean by that? When a company's earnings, all right, compared to the cost of investments, is your payback period is less than 10, that means you're a very undervalued stock. Yes. Normal environment stocks are between 12 and 15. So your ability to get a price appreciation is much higher at the moment. Secondly, the yields or the dividends that you get from these current stocks at these prices are in the region of around 10 to 15%. I think I've seen the highest at 17%. Even better than the fixed interest instruments. So fundamentally, companies are doing well. They're performing well. The fundamentals are strong. Yes. The returns are good. And so, elections notwithstanding, this is a real buyer's position. Okay. Anybody with a time horizon of 3 to 6 months is looking at a good upside. On top of that, we have a derivatives market, which if you're not sure about markets going up, just buy a contract, a 3-month expiry contract, load it. If you buy a Safaricom contract, load it with a Safaricom contract. That takes a long position or trends up. If it's a short, for the timing, that's what you possibly want to do. And should the market recover, your contract will benefit you.
Yes.
So what I try to say is that we think this market is attractive. Fundamentally, companies are doing well. It's a good buying opportunity, and your ability to make money is higher.
Okay.
And it stands a great chance. So our view about the election is that we are pricing in an outcome that will keep the market stable.
Okay.
We've seen a lot of focus on the economy,
Okay.
which is very exciting for us from all the leading candidates. We hope to engage with the next administration to tap into the capital markets, to raise financing to finance government programs. And I believe a lot of investors will be keen to continue investing heavily in this market. Kenya is an attractive country, and we actually see this country and the markets appreciate in the future.
Wow, that's beautiful. I love the positive outlook. Young people say that the vibes are positive. Yeah. You are young at heart, Mr. Geoffrey, but thank you very much for your insight, Geoffrey Odundo, CEO of Nairobi Securities Exchange, just giving us the analysis of the first half of 2022 and also the projections. And he's saying now is the buyer's time. It's time to invest now. Sooner you'll be gaining from the markets. Well, that said, we want to take a look at the markets, shall we?